Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde back, Taylor Riggs here, counting you down to the closing bell, and here to help take us beyond the bell. Carol Massar and Tim Stenovec bringing together our YouTube, radio, and TV audiences worldwide here to break down what's going on today. And Carol, it looked like we were coming in today for a pretty big rebound after yesterday's sell-off. But of course, the headlines that we got earlier in the day about the Omicron variant here in the U.S. and some of the potential measures to fight it, that really took the wind out of the sails of stocks.
Right. Think about how many days we're like, what's the catalyst? What's the correlation? Well, it's very clear today. Dr. Anthony Fauci there at the White House press room talking about Omicron, talking about it. You could see the equity markets just take a leg down. We are pretty much at our lows of the session, and it's broad-based. I think utilities at this point are the only major industry group in the S&P 500. Tim, eking out a little bit of a gain.
Yeah, it's quite the range, too, especially with the NASDAQ today. It was high as 1.8% to the plus side and as low as right now, down 1.8% to the downside.
Yeah, and this is committed movements. Initially, it was committed buying. Now it's committed selling. Volumes more than 44% higher than usual on the S&P 500, more than 57% higher on the Dow, Taylor.
And the internals yesterday we were hearing were pretty negative. When you were taking a look at the individual stocks, and you're well more negative than you are positive today. So it certainly seems like that selling pressure, Romaine, continues. And this brings up the question if the flight to safety within the bond market is happening, or like yesterday, a mix of a pull forward of some of those rate hikes.
Yeah, and it makes you wonder sort of how prolonged this could be or not here. You talk about the flight into bonds, the flight back into gold here. And even in the equity market with regards to some of the individual movers, we're now talking about McCormick and Hormel and Clorox, sort of all out of the consumer staples names. What does that tell you about the mindset right now? Even something like Apple, which was kind of the big defensive play out there, even that's not really doing anything of note here on the day. As we get the closing bells here, Apple going to finish the day down about 0.3%. You see the NASDAQ composite down about 1.8%, the S&P 500 down about 1.2%, the Dow Jones Industrial Average down about 1.3%. And we have to talk about those small caps, that cyclical trade here. The Russell 2000 is officially in correction territory. That was, of course, confirmed on Tuesday here, moving deeper in that direction, on Tuesday, I should say, moving deeper in that direction, down 2%, 2.3% on Wednesday.
All right, we're going to dig deeper into the groups and what was really dragging down. It was pretty much everything, I guess, in the S&P 500. Just take a look, though. 98 names actually able to eke out a gain, and it's got to be some of those safer plays that we saw certainly during the shutdown and the pandemic. 405 names, though, Taylor, to the downside.
And Carol, really is some of the safety names, as both you and Romaine have been pointing out for our radio audiences. We do the sector winners, the sector losers. There is some red in the green, but let me point out the green. It's utilities, that's a bond story. Technology, a long duration asset, that's a bond story. Then it's food and beverage. It's household products, right? How much are we talking about restoring up again within the house? So let's keep our eye on that, as those are up about 1% or so to the downside. And there's a lot of it. We could go anywhere from energy all the way down to media, food and staples again, even auto components that are up the worst, about 2%. Carol.
All right. I was a little nervous when it came to my gainers, concerned that they wouldn't hold on to their gains. They did. So I'm going to talk a little bit about drugs, chips, and beer. Vertex Pharmaceuticals up about 10%, pretty much holding on to its gains, top in the S&P 500 and the NASDAQ 100. Their experimental drug VX-147 was well tolerated in a treatment. It provided some clinical proof of concept for the first genetically targeted approach to treating kidney disease. So that one really rallying in today's session. Want to talk about the chip stocks because we did see them moving in a big way. AMAT holding on to a 3% gain today. Microchip, Micron Technology, these were all moving and top in your major equity averages. Citi raising its price target on AMAT to 175 a share, stock closing at 151 and change. That 175 target was up from 160, and Citi maintaining its buy rating. And then I want to mention Build-A-Bear Workshop, very well known to any of us who have kids. Yeah. We know Stuffies. That stock was up about 30% by the close. It's up about over 350% this year. Company reported record revenue, a special dividend, a $25 million share buyback, and they raised its full-year guidance. That stock, though, I know it's a small cap, but it's been on a tear.
It is a small cap. Before we get back to the decliners, just go back to some of the headlines here on the S&P 500. This is the worst two-day rout that we've seen on the S&P 500 going back to October of 2020. We should point out the S&P and the NASDAQ each close right now at their 50-day moving average. They're each down about 4% from their all-time highs, which, of course, were back on on November 18th and November 19th. The Russell 2000, which hit a record high on November 8th, is now down 12% from that and well below now its 200-day moving average.
Yeah, some really important context there. Let's talk a little bit about some of the decliners on the day today. Moderna suffering a 12% close lower, the most since November 5th. This is because it lost an appeal of a patent ruling involving a rival's drug delivery technology that could make its COVID-19 vaccine vulnerable to infringement suits. At issue are 2 patents from Arbutus Biopharma Corp. Interestingly enough, that stock higher by more than 40% on the day today. Salesforce, the cloud-based customer relations software maker, finishing the day down by more than 11%, almost 12%. Revenue and profit for the current quarter fell short of analysts' estimates. The company also announced that Brett Taylor will be co-CEO along with Mark Benioff. If that name sounds familiar to you, Brett Taylor, that's because earlier in the week he was appointed chair of Twitter's board as well. Also, Allbirds finishing the day down by more than 16%. The company reporting earnings yesterday. Guidance came in conservative, but analysts were broadly positive. We got some upbeat commentary from Piper Sandler, Telsey Advisory Group, William Blair, and more.
Meanwhile, you're looking at the decliners. I'm looking at what's happening in terms of commodities and what's been on the decline. It's been a roller coaster ride for stocks today and indeed for oil as well. Remember, we're all bracing for what OPEC Plus will do in terms of production. Many feeling they could curtail supply because, well, price has been on the downside. And on the downside, they went again today as we see the first case in the US, in California, of Omicron. Brent crude off by more than a percentage point. $68 is where we trade. $65 is where we trade on WTI crude. Gas actually coming down that little bit. Basically, the world of commodities reflecting a worry about economic growth in the US. Globally, if we see a pickup in the variant, I look at that like flight to safety that we've seen in the FX market as well. Canadian dollar falls along with some of those commodity names. Same too for the Aussie dollar off by 0.4%. Where does the money flow? Back into the US dollar, which was actually basically eroding a lot of its losses earlier in the day. And indeed, Japanese yen up 0.3%, your typical flight to safety. And sovereign bonds, I mean, a very mixed picture when you look across the global news in terms of yields rising over in Singapore and Ireland, down in Greece and Canada. So idiosyncratic moves. What's happening in the US, Taylor?
Yeah, really incredible. Sort of the flight to safety we've seen, the flattening of the yield curve. I want to pull up the 2s, 10s, and 30s as we always do. These are intraday moves, which are interesting. But if you also take a look at the long end, the 30-year yield is now the lowest since January of 2020. And the 2s, 10s yield curve also the flattest since January of 2020. This is a 10-year, which a week ago we were at a 166. We're now making all our way back down to a 141, the lowest that we've had since September. But a lot of flattening out on the long end. I mean, a 175 on the 30-year. Romaine, a week ago, we were at 2%.
Yeah, I don't get that. And I also don't get, what do you make of the fact that the real yield, the 10-year real yield at least, is still below that 1%, negative 1%?
Yeah, it is still very negative. That, as we heard from Alicia Levine, Carol, speaks to the loose, massive liquidity that is still in this system, and maybe the pull forward of the rate hikes, which means lower growth, lower inflation on the long end, and then, of course, maybe a flight to safety as well, getting this low on the 30-year.
You know, I've been thinking a lot about what Jay Powell has set up on Capitol Hill this week. What a wild week that here we have volatility in the markets. There's concerns about another variant. We have a lot of questions out there. They're saying it's going to be 2 to 4 weeks before we really understand what this variant is about and what impact. I was just looking at a headline that South Africa's health ministry reported that virus cases doubled in the last 24 hours. This is on our Markets Live blog. It's just a reminder of how these variants can ramp up so quickly. What will this ultimately mean in terms of what Jay Powell said, who seemed like he was a new man, Taylor, right? In terms of being a lot more hawkish. Is he going to have to dial it back?
Well, we should also just point out, too, I mean, it's not only about the number of cases and the spread, but also about the severity. And we've heard from Dr. Fauci, we heard from the governor of California, making the case that the symptoms, at least based on what they know now, are a bit milder than what they were for, say, Delta or for Beta or the first variant that we first got.
Right, but it's still early. As Fauci said, these are breadcrumbs, and be careful about holding on to and latching onto breadcrumbs. I got to tell you guys, I was a little confused as to the market drop that we got mid-afternoon, because I really thought that people realized that this new variant is making its way around the world. We've seen this play out before. These things don't care about borders. Why wasn't this priced in? What's different? What changed?
But there's been a lot more chatter about that. We're expecting to hear from Biden tomorrow, apparently on some sort of COVID protocol. And that's really what we're talking about now is travel. It's economic activity and the movement, right?
And look at what's happening in terms of yields. Taylor, this is where you come into your forte, because US 30-year yield falling below 1.75%, the lowest level since January 6th, of course, a day that is etched on all of our minds.
Yeah, you know, we've been talking a lot about this, and not to get cute or smart here, but the equity markets, every equity strategist is sitting next to the bond strategist, asking them
Right.
sort of what moves are you looking at? Because the bond markets had been hinting that something was underway. Anytime, Romaine, we thought we got to 175, 2% on the 30-year, you had massive buyers coming in. And then, Carol, to your point, when we talk about that new Jay Powell, really thinking if it is a more hawkish Fed, then what pressure does that put on the long end of the curve?
And we have to start thinking about dates. You know, as Romaine, you said, that December meeting becomes even more important. But will he have, depending on, you know, are companies holding back on capital expenditures or hiring people? So then do we have to wait for another jobs report come January before the Fed feels confident about doing things? I mean, I think the data points, the daily one, as well as the COVID data points are going to be really key.
How confident are consumers? How confident are people on the ground?
Right.
Are they willing to go out?
Very confident.
They see these
Demand
headlines.
travel.
Do they go? Do they buy a plane ticket for Christmas or for wherever they're planning to go?
Exactly. All right, we're going to continue this conversation, no doubt about it, into tomorrow. That's going to do it, our market wrap, our Beyond the Bell segment, live on radio, YouTube, and on television. We'll see you again, same time, same place, tomorrow.